our last point of supply because we tapped into some demand. Instead of taking that risk entry, we tapped into demand, we took out that supply, and then we come right back and we could take our entry right there, and then you target the highs. But I also would have taken this trade, and the reason being is because I know my liquidity cycle. My liquidity cycle is expansion, break a structure. Now I could look for sells until we get into this extreme level. All right, what's up, family? We are back with another YouTube video, and today we will be simply going over a charting session. I'm not going to replay bar it or anything because I don't want my screen to freeze. But in today's video, you will learn how I actually look at the markets, how I see everything, and essentially be able to take this information I'm going to give you. It's going to be a very short video. That way you guys can watch it over and over, that because there'll be some really complex things that I mentioned in this breakdown, and I just wanted to go over one piece of price action that allowed me to take buys way back in May, and it's actually beautiful price action the way everything laid out. I'll explain every single thing and every single piece of the market, almost every candle, so you guys can actually see why price is doing what it does and how I'm actually seeing it, and how patience, risk management, and just aligning time will allow you to make tons of money in these markets. All right, guys, so as you can see on our chart right here, we have a beautiful setup, and we're going to remove everything, and now as you can see, it's just pretty naked. But the reason price does what it does, price does not move randomly. Price moves because it wants to gather orders on the buy side or the sell side. Whenever you see price market or price action moving sideways, we are moving sideways because it is an equilibrium in the market. There's the same amount of buyers and sellers in the market. Once we see an abrupt move to the downside or to the upside, then sellers or buyers took over. So if we were looking at this, a lot of people might say, hey, we're bearish, we're consolidating. We are doing a little bit of all things. Right now we're bullish, but we're in the larger daily maybe consolidation, and we're looking for an expansion to happen in the market. Now on the daily, we have let's start over here. On the daily, we know that this is probably a daily level because it made this high. I traded this, so I know. But let's say we want to validate what's going on over here. Well, essentially what's going on over here is we have a demand level that is reacted in the market, right? And this demand level is starting to hold because it tapped into something over here, which could be these buy to sell wicks. This is on the lower time frame. This could be a strong move that created an expansion in the market, and price loved the level. We also took this, we reacted from here. We swept a low here. As you can see, this little candle is very important, its details. We swept a low here. So I really love this level because it took that candle and then it made an abrupt move. We come back and then we start to hold this supply level. And a lot of people get frustrated when they see this. Like, you might enter a trade here, look for buys to take the high. It doesn't. Well, you be patient because a lot of times price will just hold supply to get more sellers and buyers in the market, and then utilize those orders as liquidity to move price in the way they want. So in my eyes, I see that. I actually just dragged this entire thing over because it tagged this level tightly. I would use this as my protected low until we broke that if I took a trade here, which could be a valid trade if you trade that way. But we actually create a move up, and then we consolidate. When we consolidate, we actually take these lows and we push to the upside, right? We created this sort of range of liquidity, right? And it probably was during Asia session or something like that. So we create this range of liquidity, we move to the upside, and we continue to go higher. A lot of people are looking to buy from here because it was a big move in the market, which is valid. But what happened was price moved in that direction, created a low, then created another high. If it came back to this level, it has to break this low, which means we have a break of structure. So we actually end up breaking this structure, as you can see, going to the downside. Now, this is where in the market people can be wrong, or you can afford to be wrong, right? You know that, hey, like, this is a demand level. It might have been mitigated already. We're not too certain if this is going to hold. You could take buys from here because we should be expecting this. But knowing that time is late in New York, it's no point for people to be taking this, to be honest with you, because it's not enough volume in the market. It shows it here, but it's not enough volume in the market. So the next key level that I would be looking at would be this level. Why? Because it swept liquidity the same that this level did. These two levels held and left equal lows, which is liquidity in the market. So we want to pay attention to that in the future. If sellers do step in the market, then we know that we could potentially now move this level, use this level still or the level below it, but it'll definitely take these lows. Because we took this level, we now want to see this as a triangle. We want to see this as a void. It could come here and continue. It could come here and continue. It could even sweep sometimes slightly and continue, right? But if we're still bullish, we know, hey, listen, price is bullish, but we're starting to show some bearishness in the market. Map out your levels. Well, this was our first level. That level died. Once that first level dies, I would have looked for sales if it came back immediately. But we have a liquidity cycle that's happening, right? So right now we have a expansion, right? So we got an expansion. Then we have either you'll have a break of, let's just say a break of structure, and then a complex pullback. And then the last thing will be back to expansion, right? Expansion, sorry, y'all. So this was our expansion. Then we have a break of structure. Now we are getting our complex pullback. A lot of people get caught in this complex pullback because it could look like this. It could be like this, come here, it could come back up here, it could come up here, then it could come down here to the extreme, and then it goes. Complex pullbacks can look like this. Literally, it can look like that. But you want to always know where your extreme level is. Well, if my extreme level is down here, I'm going to wait for that level to get hit. This demand is no longer valid because it is at the 50% of our range, right? Remember, this is our lowest point. This is our highest point. These are internal levels, right? But this, if we go to the 4-hour, this and this are key, right? Very important to pay attention to. As you see this level, it is below the 50%, but it's not in our deep premium if this is our low, even if this was our low. So we want to be patient. This level is nice. It could give us a reaction, but is there enough orders from this level to keep making a new high? I would assume that it's more orders below to make us a new high, if you guys understand that. We want to always buy low or buy in a discount and sell in a premium. You will never go to a car or used car or a new car dealership and want to buy at the premium price. You want to buy at a discounted price, and you want to take that car back to the dealership and sell it at a premium price, right? So you want to buy at a discounted price, sell at a premium price. It's the same thing with the charts. We want to sell above our 50%. So anything up here, we would like to sell. At the middle, as you can see, we play around a lot at that 50% level. It will liquidate you. It will wipe you out. It will not help you, right? So stay away from it. Anything below that, you could look to buy or sell. If it shows buy if it shows itself. Anything above that, we could look to sell. So now here's the catch. In the complex pullback, once we take 50% of that level, right? So once price actually goes under here, we're no longer looking to sell the market if we are bullish. Now let's say if we were bearish and price was moving to the downside and we got back into the premium and we were looking to buy, we will not be buying or anything anymore. So meaning if we were looking to sell, but price was already back up here and we were looking to buy the market for a counter trend trade, so we were full-time bearish, right? But the market dipped into the 50%, dipped into the premium, and then dipped back down here. We are not looking to buy down here because we already tapped into some premium orders where that buy that's tapping back in under the 50% could get wiped out because there was a lot more sellers that stepped in the market up here. So right now, because price came under this 50% level, I'm no longer looking to sell from this level. It is no longer valid because we are still bullish and we already dipped into our deeper and stronger buyers and discounted buyers down here. It is complex, but just keep it simple. So we got our expansion. We're now getting our break of structure. After that break of structure, we know we're bullish, so we're waiting for the complex pullback to finish. Once that complex pullback finish, we want to look for our expansion, how we get our entry. So right here, as you can see, we have a bunch of liquidation. We have equilibrium in the market. Buyers and sellers all playing around. We want to stay away from this. We know it's at our 50% level. We know it's a level of demand here. If this level don't give us the move we want immediately, stay away from it. If you got in a buy here and it tricked you, get out of it. Don't worry about it. Take a small L. But there's no point because you know that we have levels down here that can hold that are a lot stronger. So you shouldn't be taking this. You should be patient for it to get into that deep discount, and then we look to buy. So this here is nothing. I wouldn't even sell here because again, we're under that 50%. Buyers can step in and just take it. And we know Nas likes to do that. So right now we have a few levels left. We have our demand level. We have these two levels that could potentially hold, and we just wait. So what we want to see is here. I remember taking buys because on M and Q it showed that this low swept and took the high. I entered here, and we continue higher, right? But let's say we didn't take that trade. We bounced off demand. Well, now since we bounced off demand, we got into that deep discount. We had our breaker structure. We got a complex pullback. We got to that extreme. So one or two things can happen from here. We get an expansion or we get a reversal, which we break. So expansion or reversal. We got one out the way. We got this out the way. We got this out the way. We got this finishing right now, but we don't know that until something happens. So once this demand hits, it pushes up and comes up here and creates some relative equal highs. So I know it just laid liquidity in the market, right? And then we also took levels of supply out. So here was a nice supply chain. As you can see, we have this supply chain. We have this. We have this. We have this. And then this would have been that last level-ish. We get a reaction, and then we blow through it. We come up here, react from some extreme level down here. So though we're still holding this equilibrium, we did what? We tapped into our discounted buys. We are bullish. We took these levels of liquidity here. If you haven't noticed, we actually swept these lows here, and that is another key example of, okay, we got a sweep, break of structure, or a break of supply and demand, which is what I trade. And now we just want to wait for price to come around and hold. Well, what are our levels? Because now after that break, we actually did what? We end up taking the liquidity. We ended up breaking key structure points. We end up taking everything out. All right, cool. And then we made new highs, and then we tapped back into this supply level up here. So we tapped back into the supply level. This supply level gave us a beautiful reaction. It ended up breaking what? Internal structure. But this is all part of our complex pullback. Again, we're still here. We never got the expansion now because the expansion would have took this high. But we can start to show, hey, where is demand starting to hold? Okay, cool. Well, we haven't really had any demand break. Where's our extreme demand? We have 1 and we have 2, which is this one. This one, preferably because this is the point, or even this candle here where price started to make that big push, we reacted again. So we drag this over and we say, hey, listen, one or two things can happen. We could take an L here and then buy here, or we could take a buy here. Well, or you could just wait, because who's in control? Well, supply just took out these lows. This is still part of our complex pullback. We're waiting for that last point of supply to set in the market, and then we get in. And we get that last point of supply right here. Why is that our last point of supply? Because we tapped into some demand. Instead of taking that risk entry, we tapped into demand. We took out that supply, and then we come right back and we could take our entry. This is more of a safeguarded entry right here, which you could take depending on the time. Let's see, 7, 8. I would have probably got in on this candle here. Let's say we got in right there, and then you target the highs. But I also would have taken this trade, and the reason being is because I know my liquidity cycle. My liquidity cycle is expansion, break a structure. Now I could look for sells until we get into this extreme level. So let's just say price came back up here. Let's say we were in a ping pong. This is how people ping pong. Say price came back here. We could have took a sell here. We could have held that sell too around, let's say, like this liquidity, or even this low-hanging fruit here. Caught that nice little trade. We get into the discount of this level here. Now we know that demand might start holding, supply might start breaking, which we see here. We see an indication of that, but not a lot of strength. We come all the way up into this. We can say, hey, you can take this sell, but I wouldn't take this risk entry. I would take the entry again because it's counter trend, and when demand has been holding, if we broke this low and then came right back. We didn't do that. We broke a low and went straight into the discount. We come into the discount and hold. We break supply. I am now buying the market. I would have been buying the market down here because this is an extreme and we should be holding and finalizing that complex pullback. And then we create a new high, and as you can see, price runs away, and this is something that you could do continuously. Now, same thing here. If we could break this down really quick. We have, again, our high, our low right here, and we have our high. Well, again, we get an expansion. We have our break. Well, it really happened up here, but let's say this is our break of structure. We didn't even get a complex pullback. We literally got a push of strength all the way down, and we break this demand zone. We just seen a switch in intention. We just seen a switch in market orders. So how I'm going to look at it is, okay, well, go to my higher time frame. I would map this out if this was the hour as my point of interest. We don't quite come to it, but what we end up doing is creating a complex pullback on the opposite side, because we did just break this. So now this is our expansion move. Once we start breaking these supply levels, right, now we get a break of structure on the demand side. Complex pullback. As you can see, we get a complex pullback. We get this. Well, we actually get this, and then this, and then we get a fake break or a true break. Come here. We could enter here. If we thought that was it, I would have waited for this level, and then you see we get a crazy expansion all the way. And if you look at that, it is super complex as far as what we would want to see in the market. But as you know, it switches. So over here, we were bullish. It's a lot more beautiful. You get an expansion to the upside, break a structure, complex pullback. As you can see, we get that. We end up coming down to a level, respect demand. We show a V-shape entry model. We enter there, and then price flies away. Then we get another low created. We create a new high. We break structure again. Then we actually break the extreme structure or demand point that we liked. We show a complex pullback in that, and then we enter potentially down here, and it continues, 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 and it continues. Exact. So again, sweep, break. We break supply right here. Complex pullback up to this extreme point. We take our entry expecting the expansion to happen. It is a liquidity cycle. So we get a sweep of liquidity, right? We get a break of some type of structure right here, or supply or demand. Once we get that, we want to map out our last supply level, which would have been this level here technically. We break that supply level. We start to hold demand. So now we get a demand chain in the market, which when supply is in control, which emulates our complex pullback. As we show that complex pullback, we wait for price to get into our extreme levels, which would be up here. Somewhere around these areas right here, we look for an entry to finish that complex pullback. Take an entry, wouldn't say it will be at the top, but it would be somewhere around there. And then we look for price to get back into that expansion and break all those levels of supply or demand that we were holding. And that's how price action works, simply. And that's all I got for y'all, man. I really wanted to show y'all. Again, it's 3 things that happen all the time, and these are the 3 most important things. Go look at some price action. Go look at a recent or past entry that you have had. Look for that expansion of price action, which will create your low or your high, or your high and your low. Look for price to break that structure. You might get some entries along the way into that within that complex pullback. Once we go below the 50% or above the 50% of that complex pullback, expect price to regurgitate, realign with the higher time frame, and expect that expansion to come. And this is how you can align patience with risk management, and then align it with your entry model. Once you get your entry model, you get into the big moves because you were very, very patient and waited for that. So I hope that video helps y'all. I know it's super complex. I wish I could dial it down a little bit, but I can't. But that's all I got for y'all today, man. Make sure y'all hit that like button, hit that subscribe button, because this is some amazing information that it took me a while to learn, and I just want to be able to provide it for you all. So I appreciate y'all. Let me know down in the comments which I want to see more of, and also stay tuned this week because we'll have some live trade videos coming up and some more content for y'all. So see ya.